In the crypto market, there is no secret that meme tokens can be quite rewarding. However, if you're on the wrong side of them, especially this one, then they can be quite devastating. With that said, welcome back to EllioTrades channel. I'm a host, Krown, again today, and a bit of a different video. Before we get into this one, I should let you know I have my own channel. There is a link in the description below, of course, and you're free to you're welcome and free to hang out there at a moment in time. We don't tie you down to the seats. More importantly, we do Bitcoin analysis each and every day and a few altcoins here and there. So if that sounds like it's for you, well, you're more than welcome to check it out. Anyways, today's a bit of a different video, as a lot of the time we talk about charts that are looking very good, but I want to do a bit of a case study on a chart on a name that has been getting a lot of clout recently, a lot of exposure, and I wanted to talk about sort of signals and signatures from the technical side that are a good, essentially just good things to know that can let you know that, hey, this is not the time to be putting risk on an asset like this, or at least very unlikely to be the time. And of course, before we get into it, I should also let you know that we will also offer up invalidation conditions for what I will be speaking about. As you likely already know, it's not just about talking about what's likely to happen, it's also about talking about how to not know that that is likely to happen. That is what creates a real trading plan. And of course, it is, as always, a game of statistics and probabilities. Please do not be seduced by a lot of the very interesting headlines that you might see on crypto Twitter, crypto YouTube, all these great social media venues, because at the end of the day, the name of the game there is for views, and understand that very rarely can you actually 100% know something for certain in the game of trading. There are, of course, 10 sigma events, meaning that you can't plan for them. Anyways, with that in mind, which coin is the one that we are talking about today? It is SHIB token. Now, again, I'm not saying this to, rain on anyone's parade. I'm not saying this with a smile on my face. I'm saying this so that we can educate ourselves a bit on when to identify something that has more than likely topped, or at the very least is not going to be doing these massive 10x, 100x, whatever x moves that I see a lot of comment sections and a lot of just social media. It must be like a social media campaign that essentially is, trying to implement this whole fear of missing out, for lack of a better terminology here. So SHIB is this chart, obviously, and it's already gone on a pretty astronomical run. This one went on a 1,142% run, essentially, from its current lows, from its prior lows to its current all-time high. Now, that alone is rather concerning. First and foremost, what sticks out about this is the volume signature. You can see that on all of these successful pumps to the upside, volume is tailing off. So that means that the rally is being less and less supported, and there is less and less participation. So at the very minimum, we are looking for this one to trade sideways and very likely correct down. I would not be looking for any new all-time highs anytime soon, that being especially this month and perhaps even by end of year. Now, is there an invalidation condition on this where I'd get bullish on it for new all-time highs yet again? Absolutely there is. There always has to be. Where would it be? Well, where is our trend? As our trend is our friend. As long as we are below this spike high right here at 7,500, this is heavily bearish. That implies, and I would go as far as saying that this is even likely that this will get short-term bounces in between there, called bull traps, where you'll probably see this thing, retest anywhere around there. That is completely fine. But as long as there are no daily closures, very specific daily closures above 7,500, the trend is to the downside, and you do remain with lower highs, and all rallies very likely do fail for the short period of time here. Anyways, as far as indicators go, we have several things of great interest right here. First and foremost, the second most important thing next to trend is, of course, volatility. This is the BBWP, the Bollinger Bandwidth percentile, which is essentially measuring the dispersion of returns and then ranking them into a percentile format. That is to say, when we get very high like this in 100 percentile, like we saw over here, and then yet again at 95 percentile right here, this is a really good signal that we are going to see this one at minimum contract. In this case, that means trade down from where we currently are and consolidate, and at most reverse, which is what I do think is what's happening here. Anyways, With that in mind, you know this intuitively by understanding volatility, because volatility is a mean reverting indicator, meaning that it's designed that once it gets up to these crazier numbers here, it will come down at some point in time. And with that said, this is why volatility is so powerful. Volatility, again, is measuring the dispersion of returns. So when it's very high, we expect very violent price action, like you see right here, like you see on this run right here, of which totaled about, what was it, 1100%, very impressive. But as the dispersions of returns contracts, we do expect that that comes with, at minimum, a consolidation sideways and down. The problem with something like this, and something that I learned very early on in my trading career from my trading mentor, what is this? And I strongly suggest that you write this down. The way that you go up is the way that you typically go down. And in this case, when you go up to the moon in realistically just a few weeks with no real supports being built in between there, it typically come down the same way until you find your real support, which in this one, well, we'll go over it about now, I suppose. So let's bring back up these indicators over here. Not only is volatility and trend against this one right now, but also we have momentum. Remember the video that I put out, I think it was 3 maybe days ago, where we spoke about identifying bearish divergence as a good signature of, at the very minimum, a great time to not invest or trade or whatever to the long side in this case. And at worst, a bit of a reversal. And what do we have right here? Big RSI reads. We're talking about a 94 read, rather high, and then our secondary high, which was a lower high correlated with this peak, which I'll mark off right here. Boom and boom, a lower high on the RSI. So what does that tell us with the RSI? It tells us what the volume signature was also telling us, in the sense that this one is losing momentum as it makes new highs. And if that is to be trusted, then we expect that the rally will then come back down and consolidate lower and perhaps set it up for another run later on. But I do not believe that this would be happening anytime soon, maybe even ever. I mean, it could be like it could be like years down the road, of course, but we're not talking about that. We're talking about in the next few months here, because this one's really hot right now. Anyways, with all of that said, there's actually a strong chance that this one does bounce up in the short-term timeframes. But like I said, as long as this one is especially below our last spike high right here on the daily at 7,500 or even 7,400, heavily bearish. And for the short-term timeframes, what do we have right here? We have a downtrend. We actually even have a bearish distribution pattern going on right here as well. But it's not validated until you actually close below, even on these lower-term timeframes, like an hourly and 4-hour, 4,500. Below there, this does have an implied move. And that implied move would be bringing us down basically to the next level that I'm essentially looking towards, which is more or less around the low 3,000s. Let's see if that matches up with anything as far as a Fibonacci retracement goes for the macro rally here. All right, let's see. Let's actually get this on the closures. And let me actually get the bottom one right as well. Whoops. There we go. What do you know? 618 Fibonacci retracement is right down around there. Okay, with that in mind, again, likely to have an interim bounce at minimum in the 4,200 region right here. But well, that's really all I have to say about that, actually. Let's move on to the next one. How else can you tell that this one's very likely putting in a major high here? And we need to go over to the weekly on the Bollinger Bands. What do we see? Okay, so remember the conditions that we were speaking about on a lot of the more bullish looking altcoins, where they were closing above the topside Bollinger Band. Said, hey, as long as that condition is met, we have trend, volatility, and momentum in that direction. It's more likely to continue than it is not. This one put in a reversal formation right here, and more importantly, will have its chance to close below the topside Bollinger Band for the first time in 1, 2, 3, 4, 5, count them, weeks. If it fails to close above about 5,600 by Sunday. So it has 1 day and 15 hours left. Of course, a lot of things can happen between now and then, but I would say that if you see that condition met, extremely likely we will see this one over the next month work its way down to the low 3,000s, which is from our current week high. Well, it's almost a 50% move, so it's maybe worth knowing. And do I think that things would stop there after a bit of a bounce? Probably not. Ultimately, I think this one works its way down to about 2,000 before it potentially puts in a macro low. And that is going to take a very long time, most likely. Not only all of this, but if we go over here to our momentum oscillators, our weekly stoke, you can see, while we don't necessarily have too much price action history, we will actually see it cross to the downside for the first time since it started getting recorded, with any sort of a closure, again by Sunday at 8 p.m. Eastern Standard Time below 6,400. So all of these things on the higher term timeframes do lead me to believe that we very likely have seen this one top out for a very long time at minimum, and at worst, it's reversed for, well, for eternity. No, I wouldn't say that. It's very naive to say something like that, obviously. But I wanted to give some insights onto kind of what to look for, as you're going to see a lot of these meme tokens and just a lot of things in general. At some point, they will naturally put in macro cycle highs. I thought that this one was a good insight into what to look for, as you will, well, hopefully it can be useful to you so that you know when to get out of perhaps some things that show similar signatures for your own trading behavior. Of course, none of this is financial advice. I'm not a financial advisor. I'm just a derper on the internet who you should not be listening to. Anyways, with that in mind, I think this is a good time to shut off this video. I hope this one serves you well, and be very cautious against these sort of, it almost seems like social media guerrilla warfare campaigns to pump up coins in this case. Again, remember the invalidation condition, but until that happens, all rallies below 7,500 are just lower highs. I'll see you in the next one. Take care.